It is Monday, the 19th of February. Let's get started for the Pulver Report. Let's go. First things first, we know is risk and trading. Please and always use trade capital only. Let's make sure we're pushing live this morning. Chat is up. Good morning. Good morning. All right, here we go. Let's get into the charts. This is the SPY. We closed last week 499.51. No equities activity today with the U.S. holiday. We go to the Qs. Close at 430.57. That trade is over. DIA closed at 386.19. A couple of interesting notes for the week. I had a notepad up from last night. So we had a couple of things. I'll get some white space and chat this up. And Chris is in the house this morning. Good morning. Not just me. Let's talk. I'm going to put broader market, broader in quotes, because we're not getting too broad, but we're getting a little bit more stock action out there, mainly in the Russell. The Russell's impressively performing. The IWM as a whole, the top 2,000, not quite as solid as the top 200. Even more so if you consider the top 25, the Russell 2000, pretty impressive stuff. So I'll talk about that right now. Broader market is outperforming. So just last week alone, the S&P was down 0.42%. The Russell was plus 1.13%. The NASDAQ was down the most at negative 1.54%. And the Dow was pretty much flat, almost unchanged at negative 0.11%. Now, like I said, broader market outperforming. We had the top 25 in the S&P outperformed. We had a plus 3.92 versus the negative 0.42, so outperformed by over 4%. We had the top 25 in the NASDAQ. I'll make sure I type this correctly. NASDAQ was up 1.68% versus the negative 1.54%. So again, almost a 3% difference there. Top 25 in the Russell. This was where it gets a little crazy. Top 25 in the Russell, 29.4% versus the overall Russell at 1.13. So pretty wild stuff with, I guess you can say, small cap. And then also there's medium caps or mid caps doing pretty well. As we're getting to some all-time highs or pushing to some fresh highs. So I am watching this top 25. I think that there's higher concentration. I think the investors out there as a whole are looking for companies that make money. That'd be the difference between like an Uber versus a Lyft. Same company, essentially. I mean, rideshare apps, but one makes money, one doesn't. Meta's making money. The Mag 7's making money. Some have been beat up like Tesla. They're considering removing Tesla from the Mag 7. You've got crazy stuff like NVIDIA has overtaken, essentially Amazon and Alphabet or Google as one of the top companies in the world. I think it's now top 3 or 4. You had the chart last week that was crazy. And it literally was like a meme stock was SMCI. If anybody saw that last week, how many of you saw SMCI last week? Donna, I know, pointed out during the trading room, we had SMCI with a ridiculous run. Year to date was up 250% and had a 25% drop just on Friday alone. So certainly some ridiculous overbought conditions. Right here, we saw 239% from this initial breakout. If we go into the first part, I think this is the first part of January. Yep. So this is the very beginning of January, right here where I started that Fibonacci. And there's your stretch to 278% to the upside. Has since come down because obviously that's a big fat candle from Friday. So up almost 280%, pulled back 183% year to date. Still pretty impressive. It was crazy, right? All right. Who else is here today? Donna, good morning. Keith, good morning. Herbert, good morning. Doug, what's happening? Thank you, Donna. LG, good morning. Wayne, good morning. Jean-Marc, good morning. Will it check silver and commodities? Absolutely. Absolutely. Thanks for asking. Good stuff. Okay. Good morning, traders. Alrighty. Yeah, let's take a look at everything. So SMCI was crazy. Again, no equities activity today. Positions for me, I'm probably looking at, we have some earnings this week. We have 493 companies with earnings. Let me see with my notables here. Let me post this in Discord. Some of the notables I'm watching. This would be in the group chat. Analysis, education. I'll do free group chat here. So this is going to be earnings, notables this week. We have 493 companies. And some of the big ones. So we get off to the start Tuesday before market. So equities tomorrow morning, Walmart, Home Depot, Reality Income. I've had some exposure on that one. That's a quarterly dividend real estate. That's I don't know if it's a REIT. It might be an REIT, but I'm actually curious how they're doing. I feel like their stock hasn't been great. Let me go to the weekly. Okay, so we got our COVID lows in a downtrend. Possibly this channel continues. Like so. I'll check some metrics on that one. I've had some exposure to that stock back in the day. Rio Tinto, this is going to be an interesting play for copper. Some of the commodities. So Rio Tinto, big jump here in, let's see, this is the weekly time frame. I like this channel. Let me see if there's two different feeds. So there's Rio. Yeah, this one here with the stock exchange. So we're at 69.12 weekly time frame. Watching that structure carefully. I mean, one thing I would look at is, could this be higher lows and lower highs where a wedge is forming, and this makes this area pretty appealing if we start to see some confirmation of the upside. Again, I'll check some fundamentals. We can look at the snowflake analysis. But if we get a break to the upside back above, let's see what this high was, probably just above $70. $75. We break above $75, getting up to 95. That's a pretty good chunk right there. Obviously not, crazy percentage gains, but you're still looking about a 25% upside just to get to those highs. And of course, if this is a swing and there's any symmetry, we have all-time highs way up here. So swing, we break above 75. First target's 95. We measure that move. Momentum gets us up into the hundreds. Certainly not a bad spot to be watching. So I'm not sure how they do in earnings. I can calculate that out. I think this is after market. Rio is before market on Wednesday. So the time in that one, I was just on Wix over the weekend doing some website work. So I don't know if that's good or bad. Etsy, see what the custom goods are for consumers. And we got some EV plays, the electric vehicle plays with Rivian, Lucid, and Nikola. I'm not that interested in the EV space. I think they had their pops in 2020 and 2021. I think that these are ultimately going to be targets that are bought out by larger automakers. Rivian, I see a ton of them on the road. They look nice. I know they're super expensive. Rivian operates at a loss. Lucid, dirt cheap. Fisker, Tesla's in a 30+% drawdown or 20+% drawdown at this point. But you're not just trading Tesla. But anyway, be careful on the EV stuff. Like I said, I think in the next 12 to 24 months, it's probably going to be mergers and acquisitions that maybe save some of these groups. I still have some garbage in my portfolio because of the EV plays like Workhorse and Ride. I've taken some of those and they're down like 99%. So lesson learned on stuff like that. If I'm going to trade them, maybe trade some options or not that interested. The big one that I think we should be paying attention to, and I think the market's going to pay attention to, is NVIDIA, right? Watch what happened with SMCI last week. NVIDIA has overtaken some of the biggest companies in the world. NVIDIA has more market cap than the entire U.S. energy sector. One company bigger than the entire U.S. energy sector. That being said, NVIDIA makes about $19 billion a year, and the entire U.S. energy sector makes about $140 billion a year. So the price to earnings, the multiple is outrageous. That is, if that doesn't embody this AI-fueled momentum, I don't know what does. So I think what's going to be crazy is I think back to Jackson Hole. I talked about this last night in a webinar. I looked back to Jackson Hole last year in August. NVIDIA all by itself created the top in the market. We had this post earnings during Jackson Hole. NVIDIA was up like, I think it beat expectations. It gapped higher, but right after that, pre-market, I think post-market on the SPY going to the next day was up like 2.5 to 3%, created a top, gap down. We had a 2-month drawdown and correction after that. So I do think there's a lot riding on this. I'm curious how this prices out. I do want to take a look at this. This is aftermarket on Wednesday. So for equities on demand, we'll probably take a look at it. If we could do a high probability, debit spread, that might be an opportunity versus a straddle. I think that's going to be insanely expensive. But I am curious, or we can look at some, in the money credit spreads so we can make this a pretty inexpensive play. But how that affects the market overall, right? Are we topping out? Does it show that there is a disappointing number, or is it just they continue to blow out expectations for revenues and beat on both sides? But how much? I mean, like I said, the multiples are kind of ridiculous. We know it's overextended. We know it's overbought. But at this point, investors are just pumping money into everything. And maybe this is either one, momentum continues to melt up higher, broader market. We go from NVIDIA concentrated into like other, semiconductors, or spread it out into more tech that's maybe undervalued. But we'll see. So I think that's going to be a big one to watch this week, whether it's good or bad for the overall markets. Keep an eye on that. Some other ones, Rocket, I have some exposure there. Carvana, I've used it. I mean, I sold a couple cars through it. Cool concept. I think they want to be like the Kelley Blue Book of cars, but their stock price is not reflected anything super great outside of a little recovery. So CVNA is the stock price here. CVNA. So all the way down. I mean, this is crazy, right? This is lows around $4 to $5 back in 2023. I mean, it looks like a good technical setup right there. Now, again, do they have the earnings to support a move like that? I mean, certainly I would have loved to have Carvana at $5. Now it's trading at 52. Do they make money? Right? Hedge work program you're using to keep track of all the back testing. Charles, I'm not sure. I mean, the portfolio back tester, I use that software all the time. I have a bunch of those from Hypertrend that I did. If you want to see, I can go with the Portfolio Architect. We talked about those last week. Let's go Portfolio Architect docs right here, Portfolio Architect. I did some testing over the weekend. This is my full auto sampling. I want to do a couple of discretionary deployments before I have class on Friday for Hypertrend. So here's let's see if this will open up. Yep. So just give me a second here. There we go. So this software, this is Portfolio Architect, which is a complement to the back tester. If I go to back tester, oops, MT4, I think, MT4, MT5 portfolio tester, that allows me to take any MT4, MT5 strategy and deploy it. I can choose the currencies. I can choose the time period. I set my presets. I can do all that ahead of time in my MT4. And then I can compile all these tests and do a bunch of tick data back testing, which is pretty cool. So this is a trend system I'm releasing. I had a class on it last Friday as an initial launch, and it's full auto trend. I'm going to get that deployed live this week, probably on 20. I'm going to do at least 20 pairs. I'll probably end up pushing towards 23 to 25 pairs. We're about to see, some trends. I think once we get into, again, curious to see what NVIDIA does to the overall markets, risk on, risk off. What's the dollar going to give us? But I think we're going to see some decent trends. March, April, May get us into this pre-summer push. I want to have a system that's just going to follow along, take some nice chunks of profit. I might turn it on for the next couple of months, let it trade through May and June if we have some drifts, and then cut it off and turn it back on, August, September. But the idea here is to run this. I tested it on full auto to see if I can eliminate some noise and just let this thing grab some chunks. So I did a pretty good job, doubled my account in a couple of years. So profit factor, solid for full auto, 54% wins, 1.2 profit factor. We can make it better and more profitable with having a little discretion. This is what I'm going to start running more tests on this week with dollar baskets and yen baskets. I think that's going to be the bigger moves in currencies this year. Watch the dollar basket, watch the yen basket. We'll probably have some other ones. I'm long against the Swiss. Everybody knows that for the last 2 years. I've been following me in the trading room. That trade's actually going well. I took some profit this morning, and I'm sorry I'm jumping all over the place here. I want to do dollar, oil, gold, silver. We'll take a look at commodities, look at some stocks. If you have any questions, want to see anything specific, let me know in the chat. I also was considering, and I'm going to try to figure out how to work this in. I might look at publishing and doing live streams in TradingView in addition to YouTube and other stuff as well. So I'll see if I can incorporate all that where I can push at the same time. If so, that'd be cool. And it looks like, am I going live today? Yeah, I'm going live at 10. Okay. So if you want to join me again at 10 o'clock, I'll be pushing again through my YouTube channel. I'm going to team up with A1 Trading again at 10 o'clock. So let me know. I'll let Chandler and the team know that I'll be there. All right, that sounds good. Okay, back to the chat. Give me some symbols, tickers. Anybody wants to see them? All right. So currency-wise, I just closed out a position on the New Zealand Swiss for a few profits. My ACAP account is still running. I closed it out right here. So I was long. I closed it out for about 70. No, is that right? 70 pips? No, I think it was like 20 to 25 pips. Let me see where I bought this thing. Okay, so there's my trade at 9. Yeah, about 25 pips. So closing New Zealand Swiss for 25 pips. I was looking for a little scalp. We hit the daily 200 EMA. I went back to the Aussie Swiss. And I'm looking at a long position on Aussie Swiss right now. We had talked about this several weeks ago in the Flex trading room. This red line that I have on the chart is a 200 exponential moving average. The daily time frame bar count is pretty high. We are sitting at around 272 bars to get back to this 200 EMA. So I'm looking for a little push on the Aussie Swiss, hopefully this week. This week to hit this 144, hit this 200 EMA. If that is the case, that's 70 pips away. I can grab a few bucks there, continue to trade, hopefully get some additional profits for charity. And also, if the Aussie Swiss pays better than the dollar pairs, then that's fine because that'll get me out of a little bit of a funk with the dollar crosses. So here's my positions I have right now. So my balance is up to 10,641. Have a little bit of a drawdown through gold and the dollar Swiss. Dollar Swiss I still like long. I'm just giving it some space. But Aussie Swiss hopefully will be good this week. Kiwi came out of the gates this morning, which is pretty nice, and that would have been that's the profit chunk that I grabbed. If the Aussie can join, that'd be awesome as well. New Zealand, I like to see that on top. That should be helping our Aussie New Zealand trade, by the way. I was short Aussie New Zealand. We were short around 106.50 and 106.25, looking to see if this wedge is breaking. So break, retest. Hopefully the next move is Aussie New Zealand heading lower. And we're going to see that Kiwi kind of outshining, outpacing the Aussie. I see some questions there, BTW or BTC. So look at Bitcoin, look at the Dow. Yep. All right, let's start with the typical Pulver report routine, which is dollar, oil, gold, silver, Bitcoin. So dollar index, here we are. I still think dollar index, as long as we stay above this yellow box, I'm bullish on the dollar. There's room up to 105.50. There's room up to 107, 107. This is 107.40, 107.50 when we peaked here in 2023. After that 11 to 12 week run, I still think this posture looks pretty good. Now we might pull back. I mean, if we look at this as a low to high, little consolidation, low to high, we could certainly pull back and have some, past resistance becoming support. But the reason that yellow box is important is because we had about 2.5 weeks of indecision. So I don't really want to see price get back into that yellow box. I'm looking to see if it will support that, right? So if we stay where the tops right here hold as what was resistance becomes support, I think the dollar index continues to look a little bit more favorable to the upside. We have a big pocket to trade back into, past support becoming resistance around 105.55. And if it drifts higher, there's your run up into 107. Now at 107 to 109, this window, I'd be looking for confirmation and then starting to look for dollar shorts. Okay, now we could be wrong with that, but I'm curious on the timing. If we get into a pre-summer push that favors dollar strength, Dollar strength, does that really, pull the markets down lower as far as the stock market, or is this one of those odd correlations where dollar gets stronger and stock market melts up higher? I've seen it before. We've seen it in the past. It's very possible that this is one of those type of years where that's what happens. Is U.S. economy is pretty strong, stronger than others. All other central banks are pretty much watching and trying to pivot on the Fed. Fed's looking to possibly cut rates this year. It's going to be less than expected, but I think that first cut's likely coming in May. Or they might just keep kicking the can down the road like they like to do. And, maybe inflation data is not what they wanted. I have no idea, right? We keep watching the Fed Watch tool. It's been an accurate tool to predict where the Fed's going to be going into those FOMC meetings. Since 2009, it's been spot on. So yes, it changes in the moment. Yes, it changes after CPI data. Yes, it changes during Fed rate decisions and FOMC statements and meetings. But right now, the market's shifted expectations from a March cut, which still hasn't happened. It's going to be a March pause, most likely, into May. So here's your CME watch tool, Fed watch tool. Should be right here. So 90% probability there's a pause in March. Here's your May. Expected to be a pause in May. Here's your June. This is where the first rate cut is predicted. 52% probability that there's going to be a cut in May. So starting over the summer. Does that give the market more time to, it's interesting. The market wants to melt up, or the market wants to possibly show some near-term tops where the, S&P might struggle at that 5,000 handle. And I don't know. I think here's an example. I said NVIDIA, I really mean it. If NVIDIA doesn't show just a blowout earnings report, I feel like this could put in a bit of a top and drag the whole market with it, because it just shows like, hey, now we're getting a little bit ahead of ourselves with, these big tech chases and this momentum move. We could have some violent pullbacks, and that, could cause a little bit of, let's say a 10% drop in NVIDIA is not bringing the S&P down 10%, but it could certainly bring it down, 1 to 2 to 3%. So corrections are interesting. I don't know. 2017, the market never pulled back. In the 90s, like 1994, 1995, we had the market pull back no more than like 2.5 to 3%. So you never know. You never know what the market's going to do. All right. So everybody good on the dollar index? That's what I'm watching. Dollar index this week, watching NVIDIA this week, oil, gold, silver, and gold. I said that, right? Oil, I still like oil bullish. I missed my opportunity to buy it. I was looking to get, long on USO. If we had an equal low, that never happened. We have this little bull channel, and I would say I like bullish. If you're looking at positioning for it, we talked about buying it in here, getting a chance to buy it again. That channel's pretty good structure at this point. I'd be careful on the short-term upside, just in case we, hit this kind of $80 mark and then pull back again. But stick with the channel. There's pretty strong support in here. If we end up blowing off this channel where it's like, it looks almost too good, it looks almost too technical. So if we hit this high and we pause, we might see a little bit more aggressive move on oil, where I think we can get back to $90, $95. So overall, oil to me is up. Okay, gold and silver. Gold has pulled back near those CPI highs. This is going to be interesting to see what the dollar does this week. Break. This is a nice little morning star that reversed back in this indecision. To me, gold is still indecisive in this yellow box, right? So if we get a break above the CPI candle back up here, gold's probably going to come back and retest the highs at 2075, which is fine. But if we have breakdown, little pullback that tests the CPI candle but ultimately fails with dollar strength, I still think you got to watch your dollar and gold closely. Okay, Gabriel saying, so you can trade the dollar index, or this is just a reference? This is a reference. If you watch the dollar index, that essentially gives you a nice kind of basket direction for what to trade on those currencies. So if you see DXY bullish, then you can be, short Aussie dollar, short euro dollar, short pound dollar, right? Short New Zealand dollar, and then long dollar CAD, dollar Swiss, dollar yen. So it's the basket that you can get into those individual pairs. It's good baseline to use. So that's gold. Silver, pretty strong support around $22. I'm going to just not get rid of it, but I think that this structure, lows, 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 lots of support right there. Bit of a fake out. I certainly love gold or silver above $26. These recent lows at 22 seem to be holding pretty nicely. If you're looking at this as a buy opportunity, as long as you don't break below that low, silver looks pretty good back to 26. I'm very bullish on silver above 26 up to 30, all the way up to like $34, $35. Bigger swing from 2020, but this might take time. I mean, I'm not in a rush. I know that long term, if silver is going to break out here, I can be more aggressively bullish when it's time. Otherwise, it's just about lowering cost-based accumulation. I've got some straddles running and strangles running on SLV, which is some of my exposure I have. We're at 2139. I have a strangle, which is a 19 by 23. So I'm collecting about 30 cents. This expiration is out to March. I think we're pretty safe here. We're probably not getting to 23, and we're probably not getting to 19. So therefore, I should be able to collect this credit, lower my cost basis on the shares that I have of SLV. Just a big range. But if we're above this, definitely more bullish on silver. Okay, Bitcoin. Bitcoin trading at 52,114. I thought going into this, before we blew off this high around 49 and we cracked that $50,000 mark, I was wondering if Bitcoin was going to give us something like this. And it might still do this. I mean, that's a bit of a broadening pattern. If we start to see Bitcoin work its way back down, then this pattern plays out. I still like buying dips. If we have a retest of this low around $40,000, I think that's a good spot to scoop up some more Bitcoin. If we don't get much of a pullback, this is what we have to be mindful of. The highs are at 68,000, right? So are traders justifying getting in at 52? Look, 52 to 68 is still a nice little rally. 68 to 100 is still a nice little rally, right? So even getting some exposure, I'm still bullish overall in the direction. The momentum's pretty good. It cleared out and shook out some of those anticipated chasers that the SEC approved. ETFs came in and the market dipped about 25 to 30%, but here we are cracking fresh highs. So if we have a broadening pattern, I still like that structure to buy any type of pullbacks. So a pullback to, 40,000 would be ideal. Pullback to the midpoint. If we pull back to like 43, 44,000, that's okay. If we have a blow off top, I don't know if I'm going to add much more, but again, if we're going to 100K, 52 to 100 is pretty good, right? We pull back here, also pretty good. So overall, still long. I did want to take a look at some Coinbase. Coinbase is pulled back. My GBTC that I'm in, we could expect to pull back a little bit, but I'm certainly looking to buy on dips if I get them. BITO ProShares ETF. Also, if we get pullbacks, I'm looking to buy, and I've got credit spreads. I got long calls, all that stuff moving forward into 2025. MARA is a mining stock. I think MARA has earnings this week. Nope, next week, the 28th. So we've got opening bell, but again, U.S. markets are closed, so not much is going to be going on outside of futures. Let's see here. I did up I think on MARA, yep. So I lowered my cost base. I collected $1 on a rolled covered call. So now I'm out to June with a $45 covered call. Give myself some upside. I will kind of get in the trenches in here if we have some indecision. So MARA, some range trading. If we come back down to the lows, I like scooping up some more. So anyway, this is Bitcoin related stuff that I'm in. MAR is a miner, or mining stock rather. And then you've got GBTC, BITO. I know there's other ones, IBIT. I'm only in, so BITO is options. I can trade options on a ProShares ETF for Bitcoin. The other ones, they don't have them yet. But there's certainly some inflows where, people are definitely adding that exposure. I feel like financial advisors, CTAs perhaps are adding in, 1, 2, 3% exposure based on client needs. I think mathematically it's proven pretty good performance the last decade plus. 1% exposures doubled your S&P portfolio returns. 2% exposure is better than the NASDAQ. So it's pretty impressive stuff for the last decade. Just a little bit of exposure goes a long way. Okay. Good stuff. All right, Charles, you good on that one? All right. Dow. So here's your US 30. We're trading at 38,644. I also look at the DIA, which is your Dow ETF. Big run since the holiday rally. Not much happening here. If I look at it from the technical side, let's take a look at this. So I go DIA or the US 30. Let me get rid of this for a moment. This is one thing I want to notice on all of the ETFs. So the Dow, if I look at the US 30 in here as well, overbought conditions with divergence. Okay, now we had that little pullback on FOMC. Here's one thing that's interesting. we haven't taken out the CPI high, right? We had that big drop on Tuesday last week. The market fought back all the rest of the week. We still have a monthly pivot available. We've got some demand down here. That's the US 30. If we go to the SPX, overbought conditions, we had that little CPI head fake. It pulled back. I think the market could struggle right here. You know, again, if NVIDIA misses, if it misses, I could see the market heading back down to these CPI lows. So expect some volatility. I'm not calling the top. I'm going to trade it both directions. I'm not going to pick a direction. If this wants to go up for high volatility on a good NVIDIA print, wants to go down, that's fine. I'll make money. I don't need to make a lot. You know, go a couple bucks out. If I have to pay $3 to make $1, I'll do that. If I pay $5 to make, you know, $7 or $8, I'll do that. I don't care. But I think we're going to have some decent volatility. If it's at least sideways, there's ways to make money there. If it actually pushes higher, pushes lower, there's obviously ways to make money there. So trying to be somewhat neutral. I just think we're going to have volatility the next couple of weeks. You know, but what I see technically is overbought conditions with divergence, which at some point is likely going to translate. This is what's surprising. So we're not quite. This is the RSI. I'm looking at the RSI on the bottom here. We're not quite overbought. But if we go to the Dow Jones, we're not quite overbought. We go to the Qs or the NASDAQ, we're right there, right? This one actually printed on the daily and the weekly. We have overbought conditions with divergence. So yes, we can go a little bit higher, but man, technically we are due for a bit of a correction. You know, how much of a correction? I just go back to the all-time highs. I mean, we could have a pullback here, be single-digit pullbacks, and still get us to the all-time highs. I think that's a healthy spot for the market to, you know, offer up a little bit of a pullback, not really do much structural damage, but past resistance of all-time highs becomes support. SPX all-time highs versus your, you know, NASDAQ all-time highs versus your Dow all-time highs. Those are levels I'd be watching. I think they offer, you know, somewhere between like a 3, 5, 6% correction. If we have a pullback from current price on the Dow, that's about a 4 1/3. So anywhere between like 3 to 6% across the indexes, which healthy. It's okay. It's okay to have pullbacks, right? 2, 3, 4, 5% healthy correction opportunity to buy the dip. 7, 8, 9%, 10%. That's definitely correction territory. If it doesn't exceed double digits, it's buy the dip all day. We get to 10+%. Now people are asking, is there enough momentum to get into a bear market, which is 20%? I don't think we're there, right? But again, it's not my job to call the top. It's my job to trade and try to make some money. If the market goes up or down, I want to make money. Market goes sideways, I'm going to make money. We're positioned in equities on demand on a couple of butterfly spreads for the SPY and the Qs. If we see price, we have this out to March 1st. So if we, you know, drift up to 503 or we drift down to 87.50 or 490 and retest those CPI lows, we're going to make, you know, probably 4, 5, 6x returns on those butterfly spreads. So if market goes somewhere, we'll make some money. That's what I'm looking at. Okie dokie. All right. If I have anybody that's in my equities on demand trading room at 10 o'clock, there's going to be a little bit of, I had a feeling I was going to be live this week with A1 Trading. I just wasn't sure of the schedule. So 10 o'clock class, just come back to my YouTube channel at 10 o'clock and I'm going to do the A1 trading session. And obviously there's no new trades today because equities is closed, but be ready for an active week. Probably looking at some fresh trades on the SPY, the Qs, IWM as well. We'll see what that wants to do. I still have some iron condors going on the IWM. That should be in some profit. More time decay is good. And then I'm trying to think. Looking at some, you know, out of the money bull put spreads. I had a big list of stocks I'm adding to my watch list, generating some income, the usual. Okay, any of the charts, any of the questions? We did dollar, we did oil, gold, silver, Bitcoin. Talked about some tickers. We have 492 companies with earnings this week. Notables I pointed out. I will probably be looking at FAS Financial ETF. What does that follow, Jean-Marc? I'm not sure. I'll check it out. So probably some earnings plays I might consider. I want to keep an eye on Carvana. You know, again, do they make money? Rocket, I have some exposure in. If Rocket has upside potential, that's great. Warner Brothers, I own some shares of that one as well. That was a spinoff of, I don't even know what. I have the stock on WBD. Hopefully it goes up because I'd like to just dump that for a few bucks a share. We got some EV plays, Lucid and Rivian and Nikola. I'm probably not going to trade those. I'm just curious if they go up or down. Rio Tinto has some promise as far as commodities go. Walmart, Home Depot, it's going to be tough to position for those because it's going to be before market on Tuesday. So not much to do there outside of just see what they give us. But I think these could also be pretty safe bull put spreads, generate some income, go out of the money, 10, 15 delta, stuff like that. We can do that in equities on demand. So we will be watching. But like I said, the big one is just watching Nvidia. I mean, it sounds crazy, but watching Nvidia, it's going to have a big influence on what the market does this week. That's my opinion. But when it, has come from nowhere, 5 years ago, it's not even on the radar. Even though for the last 2 or 3 years, its performance has been so ridiculous, it's made it one of the best performing stocks the last 5, 10, and 15 years. Now it's like top 4 in the world as far as market cap. But like I said, overtook the entire U.S. energy sector as far as market cap, but makes a fraction of the money. So the valuations are obnoxiously high, and I'm curious if that dose of reality comes in and ends up finding its way in the market. If Nvidia misses in any way, shape, or form, the market's not going to like it. So just be watching that volatility. The DAX, similar territory to the Dow. Yep, let me take a look at it. Okay, so you got your 17,077. This is going to look similar to the DAX, right? Yep. I don't see, so technically speaking, I don't see the same highs or lows, right? So we're not necessarily, on the weekly chart, we're not overbought yet. Let's go to the weekly. Well, from the lows, making higher highs, higher lows. But structurally, yes, I see this. Trend line, this looks like we could be running. That's going to be the tough part is, again, am I calling a top? If this is a technical pattern for the Forex market, we would be so excited to see this thing, phase out or just fall and fail. I don't know if that's the case, right? Indexes like this, I would say, if anything, we struggle at the highs, but what do we have? We have this recent rally, right? Let's say we pull back to the yearly pivot, we still look higher. I still would be looking for, buying the dip. So this continues to stretch. I'd like to see if there's any pullbacks, right? We get a pullback in here, then we get a chance to buy the dip, stretch out this a little bit further. This structure to me continues to hold. So looking for percentages. Let's see what that pullback is. We hit the yearly pivot. If we pull back to, almost 16,000, let's say current price to 16,000, that's about a 6.6%. So it's still single digit corrections on a lot of these indexes are still showing healthy signs. We get corrections and dips. I still like buying those dips. Just my thoughts. Okay. All right. Anything else? All good, all good, all good. Perfect. Okay. I think if there's no other questions, no other symbols, schedule for this week. Like I said, 10 o'clock, I'm going to get a little breather here, grab some coffee. 10 o'clock, we'll jump in with A1 trading. You can just jump back into my YouTube session. I'll push live, youtube.com/Chris Pulver like I am right now. This will just be just kind of doing another spot with A1 trading. I'm curious if, Nick's going to join me, Frank's going to join me. We can talk shop there, but I'll just recap and do another outlook. I'll be live on Wednesday at noon Eastern time for a little midweek market minute. I'll be live on Friday for recap. Trading rooms this week, Flex Room and Equities on Demand. I'm going to try to incorporate, I said this, I'm going to try to incorporate, if I can do the same type of stream I'm doing now, but incorporate the TradingView community, I'll try to do that as well. Get some more follows out there, people like we're talking about, then more the merrier. Okay. All right, everybody. Happy Monday. Happy President's Day. Nice way to kind of ease into the week. Currencies are up and running, crypto as well. And let's have a great week. Watch NVIDIA, watch the dollar, and I'll see you in the markets. If you want to join me at 10 o'clock, I'll be live with A1 Trading in about 20 minutes. All right. Thanks, everybody. Talk to you soon. Bye.